The markets are holding their breath before the next major move. But which direction will it take? Today's analysis includes volatility and its resilience. Will the fear index surge higher? TLT and yields. The dangerous development in the 10-2-year spread. What does it mean for the market? Silver and oil. Are commodities breaking down or setting up for a reversal? Major US indices. A brief pause or a calm before another bearish wave. Elliott Wave Analysis, SPX and Nasdaq, tracking the next big moves in real time. S&P 500 sectors and big stocks. Are leaders turning into laggards? Special features. Tesla, breaking critical levels. Bitcoin, next leg down or reversal. And live Elliott Wave Analysis for Google, uncovering technical perspectives for the tech giant. Are we on the edge of a breakdown or setting up for a sharp rebound? Stay ahead with expert analysis and precise technical forecasts. Subscribe now and let's dive into the charts. Let's begin with volatility. What we were saying yesterday is that volatility potentially formed an advanced block and we should see at least a mild decline today. This is what happened, and unfortunately for the market, volatility failed to form a big, strong bearish candle. Instead, it formed somewhat neutral one with a good chances to resume its move higher. If we look at the futures are also with a mild bearish candle, but we wouldn't take it seriously until we see a very strong reversal here. So the chances for volatility to continue higher or at least to move horizontally for a couple of days are substantial. Now, if we look at this particular chart that we shared yesterday for the first time, we saw that volatility formed an impulse upward and it had a chance to form a zigzag down. This is potentially what is happening right now, and we might see another leg down, perhaps with a sharp rebound here and the continued volatility. So tomorrow and the day after will be two critical days, potentially completing this zigzag. That's for volatility. Now let's have a look at TLT and yields. TLT is setting for a bigger corrective action. I would say that potentially we are looking for the wave A as a corrective one, potential wave B, and now we are seeing an impulse is forming, fairly clean one. If it completes like I outlined here with the red line, potentially forming wave 4 and 5, this would be the target for an impulse, and this would be the target, technically an ideal one for a corrective wave. If TLT finds huge resistance here and moves down, this would be completion of an A wave, either A or the entire bigger correction, and I am talking about potentially this one. So this would be a bigger flag of some sort. That's the possibility right now, and we are tracking it. So speaking from the candles perspective, candles are bullish, and until we can see a strong reversal, we continue to stay bullish, moderately bullish. However, I would like to emphasize TLT is hugely overbought on a few hourly frames, and technical indicators are just very extreme. So they require at least a trigger, at least some sort of pullback. Whether it's going to be a healthy pullback before moving higher or it will be a reversal one, we will see, and we will analyze it tomorrow. Now let's have a look at the yields. So yields are falling technically, and now they are approaching a very important level, 200 days moving average, which is the red line. If they don't find support here, they might continue going further down. However, like similarly to TLT, but on the other side, they are oversold, strongly oversold on multiple hourly frames, and it can trigger a bounce. And the risk for this is fairly high. Now the biggest concern for us is the spread. The spread is going down, and so far the candles are not bullish at all. And today, spread moved through another strong support line, and it is approaching the zero level, the ground level. If it goes negative in a couple of next week, it wouldn't be surprising at all. And I already discussed in multiple our analysis that moving below this minus 0.114% would be a very critical event from Elliott Wave perspective. That would be technically a point of no return, something that we have seen only long ago in 1980s. Well, that's the concern about the spread. Let's see how it develops. We all know what would happen if the spread gets negative. Now let's move on to our commodities section, and we will start with oil. As we discussed, oil is falling. No surprises here. One by one, oil is looking for new levels downward. So far, candles are bearish on the daily and bigger frames. The weekly and the monthly are shaping for a strong bearish closure. No surprises. And for the wave, what we outlined yesterday, potentially oil is forming an impulse down, and I think we need to extend this wave 3 here, potential wave 3, and it might take longer than we expected initially. That's the perspective for now. This is the target, somewhere between 67 and 65 for the current wave to complete. That's all for oil. Now let's have a look at silver. What is silver telling us? What candles are telling us today is that silver took a pause, and it failed to form a significant bullish candle. This is a thrusting line formation below major support level, major resistance levels, and perhaps it might form another 1, 2, 3 candles horizontally before moving lower. On the 2-day frame, no news, no chances right now for a move up. I think that this is a very strong bearish top. Speaking about the weekly, it's still developing. The chance for bearish engulfing increasing, just 2 days left. And the monthly frame, we discussed it multiple times. If silver wants to continue its rally, it must close above this line, above the red line, which is high of December. If it fails, it will be bearish and perhaps even strong bearish. If we look at the candle and the Elliott Wave perspective, this is the chart that we've been tracking so far. I would say that silver is forming right now wave 3 down, and now this is a corrective wave. I would say it might be extended, wave 4 and then wave 5 of wave 3. That's the perspective for now, and after that we will be looking for another big correction for wave 4. And the final data point for us is SLV Trust. We yesterday said that it technically completed reversal by closing below 29.12, and today it failed to negate this big candle. The chances remain bearish. However, we might see a pause for a couple of days before the next wave down starts. That's all about commodity section that I wanted to touch point today. We also discussed gold earlier today in our videos. If you are interested, you can check the video and also check the video yesterday where we discussed gold at much longer length. Now let's move on into the indices. S&P 500, Nasdaq, Dow Jones, and Russell. What we are seeing here, that Nasdaq is under impression of three black crowds, and today it formed possibly a harami, but it wasn't very aggressive. I would say it's more like neutral candle. Dow Jones clearly consolidated for 3 days, and now it had three out of last 4 candles closing below both 50 and 100 days moving average, which are curling into a bearish cross. So the chances for a move down either tomorrow or the day after are very, very significant. The risk is very high here. So Russell is trying to form a bottom here, but it's not conclusive right now. It's more like bearish neutral, needs a strong confirmation for either way. If we look at the futures, nothing specific here. Technically, a very similar setup that we just discussed for the daily, for the cash indices. If we look at the weekly perspective, so far the weekly candles don't look good. If we look at the last week closure, there were clear bearish engulfing for S&P 500, Nasdaq, Dow Jones, and IWM. Russell completed their tops, and now they're falling. I would like to emphasize that IWM or Russell is on the verge of breaking the 50 weeks moving average. And from the monthly perspective, Nasdaq is bearish so far. S&P 500 is kind of neutral. Dow Jones is leaning bearish, and Russell is about to confirm its bearish reversal on the monthly frame. Speaking about technical side, this is the 10-day frame, 10-day chart, and what we are looking here is for MACD cross, bearish MACD cross that S&P 500 made in December, and so far it's been expanding, and with a candle, 10-day candle, which is threatening to become a bearish engulfing in 2 days, we are seeing this expansion, and most likely it is going to be a repeat of this red technical pattern that happened in January 2022. So the expectations is for this one. The only thing this is different, I'd like to emphasize that this MACD cross is of a record magnitude, which will bring its own implications. Moving to the next one, this is an Elliott Wave chart we've been tracking since February 19th, when we said that this ending diagonal is likely to complete. So far, it is falling down and fairly aggressively. If this Elliott Wave projection works well, then we should see 7% loss in the next couple of days. And if it doesn't stop here, we might see much lower prices. This is the micro chart that we also discussed yesterday. After this is for cash index for S&P 500, we are seeing a fairly clean impulse down, which is either wave A or wave 1. Now we have a very clean zigzag here, an ABC. So it's not an impulsive wave, it's a corrective wave. It failed to make an impulse. Now potentially this is wave B, and we would be looking tomorrow perhaps for wave C here. However, I'd like to say that this development here is looking pretty impulsive at this moment. It's not complete, but it is a possibility. So I am talking about this one: 1, 2, 3, 4, and 5. If this makes it, if the index makes this impulse, and then we might see a fairly sharp zigzag or something, or a flag, or corrective flag here, then the wave 3 might start, let's say, on February 28th or 27 tomorrow. Let's see how it goes tomorrow. Tomorrow opening would be critically important for this particular structure. Now let's move on to the sectors. So what sectors are telling us? Financial is bearish and it's about to make an 8x20 MA bearish cross. Technology tried to put a stop here on the recent decline, but after the technical conditions, I'm not sure about the possibility here. It looks like it got rejection from the 100 days moving average, and this candle is not bullish until it gets a strong confirmation. Industrial most likely put a pause before getting lower. XLP, it advanced, like we said yesterday, but it wasn't able to hold and formed right now a doji, could be a gravestone doji, which is also a ceramic candle before it declined. So we have to be careful. This, I would say, it's neutral. The same thing happened for healthcare. It's kind of neutral. It might get a rejection here, and consumer discretionary are going lower. Utility is trying to hold here. They are neutral, and energy is going down. So I would say that there are a couple of attempts to form something. We might see some relief rally tomorrow based on the picture, but overall picture is bearish, and but especially if we start looking into bigger candles, into bigger signals, they are bearish for now. And I'd like to have a look first at the big stocks. So Meta is trying to form a bullish engulfing, and Nvidia also made a bullish candle, and Netflix formed a bullish candle. So we might see some rally, at least some attempts for tomorrow. Amazon is bearish at this moment. It bounced following this hammer, but it wasn't able to form a green candle, and right now this formation is neutral at best. Google is falling, and by the way, Google lost its 200 days moving average, which is a big one. But we'll discuss Google just in a few minutes in a deep dive. Tesla is falling down, and it's already at 290. Tesla is also following our great call on January. We'll talk about it in a few minutes. And having this in mind, oops, I think I closed it. I wanted to talk about NASDAQ short-term perspective, but it's very similar to what we are seeing for S&P 500. Technically, NASDAQ could form another wave B, slightly higher, and then move on downwards. And similarly for S&P 500, NASDAQ's wave up is corrective right now. So now let's have a look at Google. Our special today is Google. What we are seeing here, first of all, the perspective for the monthly closure. I would say I looked back till 2005, and I wasn't able to find a bearish candle of that strength, supported by technical indicators and some other things from Elliott Wave and from candlestick theory. I wasn't able to find at such strong bearish candle on the monthly frame. Even the one in 2020, year 2020, wasn't as bad as this one. So perhaps Google is setting for very strong decline, and I wouldn't be surprised if it falls towards, let's say, the monthly 50 days or even 50 months or even 100 months moving average, which would be a huge loss for the stock. Speaking about Google long-term perspective, this is what we outlined at the beginning of February. This chart, we made a call, and right now Google is in the middle of our target. So we are looking for two perspectives here. First is Google forming wave 2 after making wave 1, or the bigger perspective that the entire wave that Google started in 2022 complete, and now it is looking for the corrective wave to end somewhere here 146, 110. And speaking from the candles perspective, this target makes sense because we are seeing a very strong potential for bearish closure by Google. And I'd like to talk about this little chart here that we started on earlier February, and this was the perspective that we identified the very first impulse up, and now it looks like this impulse is complete here with the blue count, and the perspective for it would be something like this. So this was potentially wave 2 of a bigger degree, and now Google is forming an impulsive wave down, and it would look something like this. This would be wave 1, 2, 3, 4, 5. So we need to make some bigger analysis to see what kind of wave it is, and what would be the targets. But so far we can only estimate it, very ballpark estimate. This would be the end of it, and we would be looking possibly for wave 3 to go a bit lower. This would be wave 3, and I'd like to put some numbers here. So this was potentially wave 1 of a bigger degree. So this was wave 2, and now we are looking for wave 3 down there somewhere here. So that's that would be the perspective target, at least for now. That's not, this is wave 3. Yes, that's like this. And let me clean up some unnecessary elements here. So this is how the wave would look, and let me switch to different charts. So this is the perspective for Google right now. Wave 1, a very clean impulse. Wave 2, a very shallow correction, and now we are looking for an impulsive wave down. That's what we are seeing right now, and today is February 26. All right, so that's for Google, and now let's move on to our other special feature of the day, is Bitcoin. So just 3 weeks ago, we shared this particular chart saying that Bitcoin potentially formed double top, and what we are seeing is a huge risk for developing a wave down, and it looks like it is happening right now. So far, Bitcoin is holding on the 200 days moving average, but it has all chances to reach 75, especially if we consider this daily 3 black crows that can form in just 1 hour 22 minutes. Speaking about the 3-day frame, which also closes today in 1 hour, this is going to be a strong bearish candle and a huge elevation of bearish odds. And how it all started, we outlined this chart long ago, saying that Bitcoin is about to form a MACD bearish cross, and this is what happened at the beginning of February. And after this one, it is already in the minimum target. So it lost over 20% of the top. But this is not everything. It looks like the candles are supporting the move down, and we should be aware. So I'd like to say that this average loss between 48 and 55 would be very normal if we consider all technical elements. And the final one for today is Tesla. So we mentioned this at the beginning of January when Tesla was 400. Right now, Tesla closed at 290, so it technically lost over 100 points since our call, and we are not seeing any reversal patterns at the moment. And the most importantly, Tesla broke through this line 299.29, which was the perspective for a big impulse upward. Right now, this old wave that started from December 2022 is corrective. So the chances for Tesla to reach this target between 240 and 140 are fairly significant. But if Tesla makes a lower low below 100 and going into double digits, it would be a big surprise at all for us. All right, so let me wrap it up. Volatility remains strong. Spreads are flashing warning signals, and major indices are stalling before their next big move. The Elliott Wave structures on SPX and Nasdaq are aligning, and commodities are sending critical signals. Are you prepared for what's coming next? We'll be tracking every development closely, so stay tuned for real-time market updates and expert insights. Subscribe now for the latest analysis, and don't forget to like and share this video. Follow us on Twitter, Telegram, and Reddit at Investing Angles. Visit our website investingangles.com for premium market insights and Elliott Wave projections. Particularly, you can check a free reader package that provides you access to some select articles. Let's keep nailing these moves. See you in the next update, and happy trading.